Happy New Month, everyone. Welcome to Insight with Oladejo, and welcome to the month of April. I hope the filing of your income tax return as an individual business owner proceeded well last month. The practice has always had it as 31st of March, subsequent year after the year of assessment. And today we are going to be looking at the fact that a new era is upon us. We are now in an era of free flow exchange of information among relevant tax authorities. And if there's anything this reform has attempted to do, is the fact that issues or challenges that used to pop up in the past have now been substantially taken care of by reason of the relevant provisions that have been included in our tax laws. One of such issues of the past is the case where an audit is being conducted by a relevant tax authority, and part of the information that the taxpayer has provided the relevant tax authority relating to another tax authority of another state. The relevant tax authority would, in the past, encounter challenges in retrieving those documents or information, such that it could stall the audit or unnecessarily protract the audit proceeding. Not anymore, since in this new era of Nigeria Tax Administration Act. That is the case because Section 48 of the Nigeria Tax Administration Act provides verbatim that the relevant tax authority shall exchange information with each other for ensuring compliance with the provision of this act. That means that the challenges or the bottlenecks that any tax authority may face in the past or have now been extinguished by reason of this provision, because this provision then enshrines that power within the law, such that there should be framework for exchange of such, information or documents that would aid the verification process, or any outcome that a relevant tax authority may want to use that particular information for. So these are new days that are upon us, new beginning that we are treading upon in our taxing regime. And the second subsection again says that where any tax authority discovers non-compliance in the course of audits or any tax accruing to another tax authority, it shall refer such non-compliance to or invite that other tax authority for a joint audit. Does that mean we are now in the era of joint audits? You heard that well. One tax authority can now say, come right here, let's feast on this exercise together. In the case of blatant non-compliance that has been discovered within the operation of any taxable person. What this means is that you have opportunity for the ability of the tax authority to be compounded, and that will definitely give increased focus and increased scrutiny on your transactions. These two provisions that have been provided for under Section 48 of the Nigeria Tax Administration Act have empowered the auditing process, empowered the tax authority, and would ensure seamless availability of information and documents, that would aid the tax authority to confirm the compliance status of any entity. This is not the best of time to run foul of the provisions of the enabling tax laws. And I urge you to please put your house in order as we continue on this journey of compliance in the new tax law. I remain Oladejo Adeyemi, and this remains Insight with Oladejo. Remember that I am that business coach that designates his time to reading the tax laws so that you do not have to spend as much time. I will definitely come your way again. But before then, keep sharing, keep liking, keep subscribing. The goal is simple. Let us educate our business community, educate one another, such that we know what the law requires from us as we continue to transact our businesses. Bye for now.